Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little bit of money here. My job is not just to entertain, but put everything in context, including tonight's trading. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Hype cannot destroy the hope of artificial intelligence, even though many investors have begun to turn on the entire concept of machines that you can talk to or even replace your workforce with. But perhaps hype has taken stocks involved with artificial intelligence too high versus reality. Have expectations at last gotten too high to be equaled, let alone beaten? Well, you know what? That is tonight's quandary. As I survey the battlefield, the negative drumbeat, kind of lurking like white noise in the background, wafted center stage this afternoon as Nvidia, the king of AI, reported earnings the market didn't like. While the averages matter, with the Dow gaining 147 points, S&P advancing 0.24%, NASDAQ edging up 0.21%, the looming Nvidia quarter dominated the market's mindshare in a very negative way. So when Nvidia actually reported after the close, it was kind of an anticlimax. The company reported a healthy top and bottom line beat with robust guidance for the current quarter. That's excluding any new Chinese business now that they can sell decent chips there. But Nvidia's all-important data center sales came in a tiny bit light, surprising, and frankly, fitting the negative rap that we've been hearing. So the stock got dinged in after hours trading. I think that's mostly because it was up 35% for the year going into the quarter, and expectations were indeed sky high. But that's the charitable explanation. The damning one, things are slowing, and perhaps the $4.4 trillion emperor has, I don't know, fewer clothes than we thought. All in all, though, in reality, it's a good quarter. It just wasn't decisive enough to settle the biggest conundrum of AI, which is the sense that perhaps companies aren't getting the return, the bang for the buck that they should when they're buying Nvidia stuff. Mind you, I am not talking about China. That also remains a quandary for the company. I am talking about the giant spend that has boosted Nvidia's market capitalization to the biggest in land, $4.4 trillion, and maybe that so-called peak. So tonight I want to explain why, even after this poorly received Nvidia quarter, I think AI is worth every penny. Even as many seem to believe that it's nothing more than a parlor game brought to you by some high-tech hucksters who've buffaloed the entire world. First, in the wake of these Nvidia numbers, let me just give you the negative briefs. You know what I'm talking about? Which is often expressed by younger people as reminiscent of the dot-com bubble. Something that occurred, by the way, while they were in their Dr. Dentons, or maybe their Huggies, if not their respective mother's wombs, or even the proverbial twinkle in the eye. In the late 90s, we discovered that we could plug our computers into phone lines. They would make this really funny noise and then bring you something called a website. Some people really got it. As someone who could actually arguably be described as an internet pioneer, I actually suggested to the Wall Street Journal that they could post the whole thing online. They laughed me out of the room, so I decided to do it myself. It was called TheStreet.com. No one really knew what the heck they were doing back then. People were just throwing nearly as much money, at least in $1990, as they're throwing in now, okay? I got money from a bunch of venture capitalists. We worked for a couple of years, put about $75 million to work, and voila, the stock opened at an insane $1 billion valuation. Now, that was a bubble, especially because we went to $2 not that long after. 330 companies went through the same process as we did at the Street. At least we stayed alive. Those didn't. Most of them only went under. Very few came through the other side, like Amazon. But people remember the losses. The worst losses came from the fiber optic companies that laid the track that powered the internet. Okay, get that. Because that's the latter-day Nvidia. The second worst came from the search engines. The third came from the phone companies. A huge number went bust. What didn't go bust? Okay, Amazon, Cisco, Google, fortunately hadn't come public yet, so it didn't get to go bust. They joined the previous winners of the PC revolution, Intel, Microsoft, and Apple. The others never saw the field. The losses were staggering. But those winners, they were amazing. They were run by the smartest people who took advantage of everything you could ever take advantage of, and they made their shareholders fortunes. As they grew, we heard at every turn that they were just parts of the bubble, and then when the bubble burst, it would just be a matter of time before they would burst too. A matter of time, a matter of time, a matter of time. Well, the time mattered. Nothing happened. Sure, Intel and Cisco didn't soar like the others. Cisco's still very much alive. A mismanaged Intel needed President Trump to get the money to be able to stay a survivor. Right now, I'm hearing that what we call the hyperscalers, the companies spending on fortunes on Nvidia, the ones that write the checks to Nvidia, are part of the AI bubble that was just like 2000, okay? Microsoft's like 2000, Amazon's like 2000, Google's like Oracle, which missed the internet, well, but is all in a data center, Meta, and even Tesla, which wasn't around to birth the internet. They are all writing these checks, and it's wrong that they do so, and that's what tonight's quarter showed. I don't know. Did they all go wrong buying accelerated computing and generative AI chips? It's the equivalent of all the companies that participated in the making of the building blocks of the internet. Tonight, people are wondering whether the money being spent on Nvidia is finally peaking and petering out. Now, I want to stipulate some things. First, the companies I just mentioned, the hyperscalers, are run by the smartest people on earth. Second, they have the better balance sheets than any country in the world. They have incredible revenue growth. Apple is the only one of these heavy hitters that isn't writing huge checks to Nvidia simply because they don't have an AI strategy. Apple stock, by the way, is the poorest performer of the big tech stocks. Will that change after tonight's numbers? Well, Apple turned out to have the last laugh while all the others fall flat on their faces. Is Nvidia fooling everyone? Is Jensen Huang fooling everyone? Are the valuations all way too big there? Listen, we heard the same thing about the dot-com survivors at the turn of the millennium. We, who liked those stocks, were called clowns. I was considered, yes, a genuine, legendary Wall Street funny man for supporting them. And then I came up with this ridiculous thing called FANG, and people really laughed me out of the building. Thank you, Bob Lang, for helping on that one. He's for the stream. You know what's ironic? I often hear from people far younger than I am that we've heard this before, and all these companies are delusional, and so are their CEOs and the buyers of the stocks. These young skeptics tell me that we're looking at the biggest bubble in history, with Nvidia, the backbone of generative AI, being as overvalued as Cisco was in 2000 when it was worth $550 billion. It's true, Cisco was overvalued at the time. It's now worth a little less than half of that. But here's what I have to say to them. I don't care about the seemingly sky-high market capitalization that these stocks have. I'm simply trying to put a valuation on a company that makes what you need to become one of the serious players in AI. I learned not to question Amazon or Microsoft or Google or Meta or even Tesla, the big customers, a long time ago. They know more than I do. They are run by people much smarter than I am. Much, much smarter. I'm just grateful they let me along for the ride. So feel free to dismiss AI as a bubble. But the bottom line, during the 3 or 4 years of the dot-com bubble, people did make fortunes who had faith. And some, yes, you had to ring the register for, but even when the dot-com bubble burst, there were a handful of fairly obvious winners that eventually came roaring back. You did have to be courageous to buy them. If you gave up on Amazon in 2001, you missed the $2 trillion boat. If you give up on Nvidia now, I think you could miss a boat that's not sinking, just resting, before it reasserts itself. So I say, own it, don't trade it. Let's speak to Ian in Florida, please. Ian.
Booyah, Jim. How you doing?
I am doing well, Ian. How about you?
I'm doing excellent, Jim. Thank you.
All right, fill me in. What do you got?
Man, you know, I'm a 5-time caller and Investing Club member.
Thank you.
Absolutely.
I thank you from Jeff Marks, too. Jeff right now is working on, he's doing a little work on the CrowdStrike there with the George Kurtz. How can I help you?
Well, Jim, I want to get your opinion on something. I've been looking at a stock. It's almost 50% down for the year from the 52-week high. Nvidia has a pretty big stake in it, too. They're highly affiliated with Nvidia. What do you think about getting into, at this point, Coreweave?
Okay, look, I like Coreweave. The problem is I like InTrader Elias, the CEO. Here's the problem with it. You know, people kind of like are saying, you know what? It's moved up so much. It's going down. Here's what you do with a stock like Coreweave. I learned a long time ago, sometimes stocks tell you what to do. This one is going to tell you what to do when it stops going down. And that has not happened. And do not count today, because today was a bounce-back day. Let's see. This stock is going to tell us. I need to say that because it's losing money. When you have a stock of a company that's losing money, you have to let the stock tell you. And I can read... What can I say? I'm a stock whisperer. That stock is not yet done coming down. But I like your concept. I just think there are other better stocks in this market. Sure, there are a lot of losers in the dot-com bubble. I know 330 up. But if you think we're in an AI bubble now, I think you got to go back in the history books. You got to do some work. Don't listen to the people who were in their Dr. Dentons at the time. Maybe they were in Pampers. Oh, maybe tonight. The fast casual stocks have fallen out of favor on Wall Street, so I'm checking in with one of my old favorites, CEO Chipotle, get a better sense of what the company has in their pipeline. Then CSX has caught the eye of the activist. Is it this or is it this? I don't know. Why don't we go straight to the source to figure it out? Get the company's response. You don't want to miss that. And then Snowflake, hey, how about the star of the night being on this show? Can you believe it's David Cramer?
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.